Good afternoon, everyone. Cal warmly welcomes you to our discussion today on the construction sector in Sri Lanka. The construction sector in Sri Lanka has had a tough couple of years, from steep interest rates, high cost of living, keeping construction activity as well as infrastructure spending to a minimum. Many large-scale projects also coming to a halt. But since then, we've seen interest rates have come off, construction PMI is up, and the economy is starting to show slow signs of recovery. But how fast does this really translate in terms of the construction industry itself? Which segments are we seeing that growth starting to come in, and which segments are benefiting first? How does the finalization of the external debt restructure, particularly among the bilateral partners, change this outlook for the sector? And in terms of private investments as well, are we going to start seeing a little bit more capex spending starting to come in, and how does this really impact the order books of the construction companies? So over the next hour, we will look at discussing some of these questions with our esteemed group of panelists over here, which function within the construction space, covering in terms of retail construction, commercial private, as well as state and donor funded projects. So to introduce our panelists today, we have with us Mr. Mahesh Amarasiri, the CFO of ACL Cables PLC. We also have with us Mr. Christopher Joshua, Executive Vice Chairman of Access Engineering PLC, and we have with us Mr. Jan Kunigk, CEO of INSEE Cement. So before we start, we'd like to just mention that we will have a Q&A session at the end of this discussion, so please send in your questions using the Q&A option that's available on the platform. So to start off with, Mr. Jan, I'll start off with you. In terms of the private sector, particularly looking at both near term as well as medium term, are you seeing demand actually starting to pick up? Interest rates have come off, but credit is still a little bit slow. But have you seen signs of retail activity picking up, whether it's in Colombo or even out of Colombo? And also just if you can touch a little bit in terms of the industrial side of things as well, and how things are moving in that direction.
Thanks, Tricia, for having me. To answer your question, yes, I think we can see some green shoots growing. So the last couple of months, or since beginning of the year, I think the cement demand, and with that construction as well, has improved slightly, step by step, year over year. But we need to consider where have we been a year ago, at more or less a 20-year low point. So some positive signs. I think we've bottomed out, and from now we are in recovery mode. I think we can see it along private consumption, but also industrial. For sure, many of the big projects, they came to a complete halt. Some of them start to get recommissioned slowly. I think until the full consumption is there, that will still take a couple of months or quarters even. We see from Access some of the big projects in the port that is still happening. And on the retail side, we can see small repairs doing, some small housing expansions or so. And on the southern belt of Sri Lanka, we see some hotel projects coming up. But across the country, I think disposable income is very, very low. The existing interest rates, even though they are significantly lower than 12 months ago, they are not yet sufficient to attract true house builders to get a mortgage. And keeping in mind also the financial institutions are much more selective in who is getting a loan today. So I think once either interest rates are even further lower, or the gap between inflation and disposable income is improved, then we will see also the retail sector improving.
Thanks. Just in terms of, that covers cement, but in terms of cabling as well, if you can just again give us a little bit of insight into, there's retail sector work that can maybe restart, but in terms of industrial side as well, there's a lot of exposure that you have. How are you seeing that kind of starting to move?
Yes, so if you look at from cables point of view, we also have seen, as he mentioned, we have seen the gradual resumption of activities, which is a good sign. We have seen that for last 6 months or so, small incremental volumes compared to what we had earlier. Also, how I see this as psychologically, the consumers are more ready to accept the price points because there will be price increases as well as a reduction in prices as well. Now, the price stability there in the industry. So people are psychologically, they're okay with the price points. So that is one aspect, and also the interest rates have come down. Also, because of this reason, they have started all the projects that was on hold. So we see increase in capital expenditure, especially on the maintenance activities, as well as a small capital expenditure, not big amounts, small ones. So we'll see small ticket sizes projects coming into play. And also there's a lot of room to grow, especially there's a gap between the disposable income and the inflation, because the wages have not been adjusted in line with the inflation and the taxation. So there's a lag. I don't know how long will it take to recover that. If that gap can be filled, we'll see a faster recovery in the industry. So if you see, look at the PMI index for last couple of months, it's always above 50. So that's also an indication that there's a gradual resumption in the construction activity. So in my view is that we have recovered from where we were. Small recovery. There's a lot of room to improvement.
Sure. If I can just kind of press in a little bit in terms of, you mentioned that small projects have kind of restarted, but large projects are not yet taking off. Is it a problem of policy, or is it the fact that they don't want to really get into completely new projects to start off with right now? Why do you see the difference right now?
I think everybody is waiting because this is election year. That's one factor that is contributing to the decision makers, as well as we don't have we are the last stages of that restructuring. So once we have that process completed, as well as when we have the credit rating working in favor of us, I think there will be more projects in the market.
Sure. Just to kind of touch again in terms of that as well. So new projects within your order book, are you starting to see that come in for access apart from state funded or donor funded projects, and we'll touch on that a little bit later, but in terms of the private side of things, are you starting to see a little bit more activity beginning, or signs of it at least emerging?
Yeah, I think as Jan mentioned, some of the bigger private sector players who have come and invested in the big infrastructure projects like the port projects, yes. So they are private to that extent, they are investing. I think, of course, because of the proximity of to the main shipping route to be in this port. So the bigger players have taken this crisis as an opportunity to come into this market, and without much obstacles to invest in the market. So that's a plus point. Some of the investments we have seen from the private sector in the petroleum side, in the port side, and now in the renewable energy side, we have not even seen it when we were having economic boom in this country. So we have seen it through a crisis period, which is also good contribution during this crisis period. From the private sector side, there are few projects which the bigger private sector people have invested, like we did a massive warehouse for Michelin during the crisis period, but they have taken a geopolitical position that this is where this country they want to be, and they continue to invest. Of course, they are global players, and they see some benefit in being in this market. So there have been some, not in the bigger companies, but from a household perspective, affordable perspective of the local householder or consumer, of course that has diminished very badly, due to the factors that this gentleman has explained. There's been a little bit in the public sector spending also. The government has recommenced some of the road projects, especially the asphalting work, over a period of time, I suppose, with the election around the corner, so that sees a little more traction. It's very attractive. Then some of the public housing projects with the government ventured, like the UDA housing projects, yes, they are restructured and they are now ongoing. Then the government itself rolled out some of the projects which we did not participate. We had some capacities because we are fully busy right now. But then some other contractors have got some projects in this transportation sector. Then in the mainly in the transportation sector, and so that has been happening, but not to the extent we have seen previously. With this bilateral debt restructuring, we see a lot of promise now in the future with the stalled projects recommencing. So that will be a huge impetus, because if this, if you're talking about new investments, the value of these stalled projects can bring in at once is close to like $2.5 billion. So that is straight away coming to the market, and it will make a huge impact on the GDP, like almost maybe 3% of our GDP. So if this debt restructuring goes the way it's going, and if it moves ahead without any interruptions, we will see this committed bilateral finance being disposed.
Sure. So in terms of your additions to the order book, we are starting to see that kind of come in already.
Yes, we have having some traction and addition to the order book.
So in terms of the state side, but also in terms of the private sector as well.
Yes, more from the private sector, not from the state side, but more from the private sector.
Sure.
But they are project specific. They are not general to the market. So most of the industry depends on the public spending, but that is not there. Bilateral spending is not there.
Sure. In terms of, sorry, Mr. Mahesh, it's again something that Mr. Joshua actually mentioned in terms of renewable energy sector projects. I think that's one area that cables is very involved in. Are you seeing these? How does that kind of translate into your order book once again in terms of new orders, and how do you see that pipeline kind of growing into the future? There have been several reforms made also in terms of the electricity side of things. How does that impact you, and are you seeing those benefits right now, or how far in the future will you start seeing them?
Actually, that's a new segment that was available during last 12 months or so, and we see a growing demand from solar for solar cables as well as related products. So that's definitely a new market for us, and we also have the set of products to cater into that. The demand for solar apparently will tend to increase in the future, as well as now there are new models available. Power wheeling is also available, so that will actually get more investment to the sector. So that will definitely a plus point for us. And also that is, we can directly supply to the project, and also there could be at one stage there should be an upgrade in the infrastructure when it comes to distribution as well as transmission network run by CEB. So then when that happens, that's also another demand driver for products. In overall, actually we are quite positive on the development of the renewable side, especially on the solar.
Sure. In terms of the CEB side, are you already starting to see they've recorded some significant profits very recently? Are you starting to see new projects coming in from that?
They are doing the usual projects.
Okay.
So that is happening, ongoing projects. But in the future, when we hit a certain level of certain threshold of renewable energy, there has to be upgrade on the distribution as well as transmission network. So that will be another driver that will drive the demand for cables in the future.
Sure. In terms of the competitive aspect of the cable sector, how difficult is it to kind of get bids for these projects?
So you need to have a certain pre-qualification that you need to meet those qualifications in order to bid. I think all the cable manufacturers that are operating in this area, most of them are qualified to bid. So it's a level playing down for everyone else. So there, what matters is the price and quality. When it comes to quality, almost everyone maintains a certain level of quality. So the advantage that we have is we have done the specialized cables. We have that experience, and we have the expertise in dealing with those tenders. So that's the advantage we have over the competitors when it comes to that segment.
Okay, understood. And just moving back to you, Mr. Yan, just to talk about a little bit of in terms of the pricing as well as the margins of the sector. So we've seen cement prices coming off quite substantially over the last year. Can you talk us through a couple of the reasons? I mean, I would assume that currency appreciation is one of the reasons for that. So do you think that is sustainable, because we have to start paying our debt repayments, which means that that's going to be a little bit of pressure once again building up in the currency? At what level do you think in terms of pricing that becomes affordable for consumers, and particularly for the retail sector?
I think right now it is very affordable. For sure, the currency plays a major role. Even though we are producing 100% here in Sri Lanka, right? Still we need to import some of the input materials. For example, coal. So that's a global market, international market, US dollar paid market. So there we are fully exposed. If the rupee for sure depreciates, at one point we'll need to pass it on. There's a certain time lag, because we've got stocks. Whenever we get a vessel, that can be 6 months, 7 months, depending on which material we are talking about. But thereafter, for sure, we would need to pass it on to maintain our minimum margins as well. I think last year we had a significant, or the previous 24 months, the increases by majority because of the rupee, right? If the rupee devalues by 5% on a bi-weekly basis, you need to do those adjustments. But since then, indeed, we've passed whenever we had a benefit and we could book it as well, then we've passed it on to the consumers as well, whether it is on the industrial side or on the private side. And I think that's also the path which we go forward. So I expect that we've bottomed out there, and depending on how the US dollar to the rupee develops, certain adjustments may be required with a certain time lag.
Sure. So when pricing is one aspect, right, when it comes to affordability and beginning, particularly on the retail side, whether someone can afford to restart or do a refurbishment or so. But we're still not seeing that despite there being pricing adjustments. What do you think will be the key factors that could change and turn this around?
I think one thing what Mahesh mentioned already is it's for sure the gap between where inflation went and where salaries did not develop at the same rate. And the question is, how many years does it take to bridge that gap? I think the reduction in interest rates has started some positive growth there, but it is still not at a level where people can afford to go for a bigger loan for a new house. They may do a repair work, yes, but we would need to see interest rate, I think, much lower, even potentially at a record low in the Sri Lankan context, to really have the affordability of a private loan or mortgage.
Just to dig in a little bit more into that, in terms of where you think the demand will come from. I mean, in terms of the regionally, specifically regionally, you're seeing Colombo being very different to the outskirts, but you're also seeing agricultural use being a lot better. So their income levels there have improved a little. Are you seeing that translating in any way at all, or do you expect that?
Not yet, but indeed you're right. If there's a very good harvest, usually that translates into a better construction demand for the next 6 months as well. When we had no chemical fertilizer, we could feel it exactly 12 months later as well. So that's where some other industries are for us a kind of a leading indicator. I expect demand for sure. Colombo, Southern Belt, I think we can see quite a lot happening on the hotel projects, more or less from Colombo down to total Southern Belt. I think Central, Kandy, in those areas we see some projects happening. And I think a little bit midterm, for sure, some of the bigger projects which were completely decommissioned, they will start again. It simply takes 6-9 months to restart a bigger project. If every concrete plant has been taken away already, you need to recommission it, you need to get the people as well to operate those plants. Many of them have left the country, unfortunately. So I think we can see quite a lot of challenges on the people side as well, so that construction can really accelerate again. We need to find engineers. I think all of our companies have lost many engineers into Australia or other countries. But it starts at the mason. Many masons have switched their jobs, are back fishermen or are back in the farm. Do they want to go back? It's a question mark. But I think also those laborers we need, and vocational training needs to happen for that in many areas.
Sure. And just one more question before I move to Mr. Joshua. In terms of the competitive landscape, how does that look right now for you? Are you starting to see signs of new entrants starting to come in because maybe the cost side raw materials are a little bit cheaper now? Are you starting to see that happening, and is the competition changing?
I think overall the industry had a good utilization until 2021, beginning of 2022. With the complete halt of the construction industry, all of us had excess capacity. So plants have been mothballed. They can be reactivated if demand comes back, and we will do that for sure. But I don't expect at the current utilization level new entrants really coming. For that, theoretically, the market is too unattractive to invest significant large amounts of money. There may be opportunistic pure cement imports coming, but we saw a significant reduction of that over the last 36 months, more or less. So let's stay with local produced products to ensure also that Sri Lanka as a nation grows.
Sure. So Joshua, just to move on to you, I think you spoke a little bit in terms of the finalization of the external debt restructure. So of course, in terms of, I think there was a waiting on the multilateral side for the debt restructure to actually be complete, while as the bilaterals were actually waiting for what the agreement was. How soon can some of these projects actually restart? Is it the credit rating change that sets things in motion, or are there already signs of them starting to have conversations of restarting certain things?
The multilateral funding has continued throughout, because there is no case of defaulting in multilateral funding loans. We have to continue to pay. The LDB and World Bank funded projects continued. If you see some of the activities, the projects which were going on, they were still funded by the multilateral agencies. So that continues. There is no restructure in there, so that will continue. The bilateral is the question, which now seems being solved. So, okay, then of course, restructuring is one thing. Then of course, the stability of the country to sustain it again, the restructuring program, to sustain the restructuring program. So I think we are into a very volatile period between now and November, I think. And so I suppose these lending agencies also will, before dispersing, will take a wait-and-see approach. Anyway, as Jan mentioned, these projects don't start up overnight. You have to remobilize resources and restructure the contracts, and then only you can recommence. So that needs a period of time. But if all goes well, we can see a positive rollout of these stalled multilateral funded projects towards the end of this year or early next year.
Okay, so multilateral funding projects will come initially, and then thereafter there's a lot of groundwork to be done.
Then the credit rating you're talking about is more to do with the private sector investments in the stock and bond market, especially the foreign investors coming in. So the credit rating is critical for the country for sure, but not for the bilateral funding or multilateral funding agencies. That is already factored. ADB and World Bank will still fund us irrespective of our rating. The bilateral funding is more or less, a good gesture. Of course, rating is important, but more good gesture and relationship between the two countries, and whatever geopolitical reasons are involved in that also. So that we have seen. I mean, it's happening during the crisis also we have seen. The country has been in debt default, but we know a US government-backed fund lends $500 million to Adani to invest for a port in Sri Lanka. So that's nothing to do with rating. So sometimes people get a little carried away with these ratings, but the funding is coming in for the specific projects which they need. But on a general capital market, inflows coming in from the private sector, yes, absolutely, rating is vital. So what we understand is, once the bilateral debt is restructured, then of course the sovereign bonds have to be negotiated and restructured. What we understand is there's some discussions there, and hopefully we'll see some light to it within the next couple of months. So once that is done, I think it's prudent for the country to go in for a rating. Otherwise, especially I believe this year our capital outflow from the capital market, the foreign outflow for the first quarter has been higher than last year. So obviously, of course, people are investing in the bond market to make the gain, but they want to exit also. But to have a long-term investment confidence, especially in the capital markets, the rating is important.
Sure. Just speaking in terms of FDI, foreign direct investments, I remember, I think the BOI had mentioned that for the first quarter of the year, they had achieved 1 billion.
Yes.
Are you seeing this actually materializing in terms of your order book? So, where is this money kind of being directed?
One good example is this port. The port investment alone is $1 billion.
Okay.
And it's already about 45% complete, and it's definitely on target to be completed.
Right.
That investment coming in through, so there is no question about it. Then we have seen the petroleum players coming in. Of course, the utility sector, been Sinopec coming here and investing in 150 sheds. Then Sinopec investing in a refinery. Of course, the money is still to come in, but the petrol shed money has come in. Then, of course, there is a third player coming into that sector. Then, of course, in the renewable sector, yes, there have been some investment, but the bigger ones are yet to come because those projects are yet to to see the commencement. So, but when the BOE talks about the order book, is very realistic. Finally, we are seeing it coming in physically we see it materializing here, then being in a pipeline.
Sure. Just in terms of a historic sense, or from your experience of working in this industry, in terms of multilateral versus bilateral funding, what can play a larger role in terms of the industry? I mean, the scale of projects can be very different. Is there any kind of gauge of one matters more than the other, or?
So traditionally, we have been developing the country, especially the infrastructure projects, through the multilateral funding, ADB and World Bank. Then, of course, other funding agencies came in, like the AIIB Bank, where they are funding some of the projects, especially the public housing project. That's the Asian Bank with the China sponsored. Then, from a bilateral perspective, Japan, bilateral funding from Japan, very concessional, as good as multilateral funding, has traditionally been very big as ADB and World Bank at one point. They only did, the port, the airport, the hospitals, or some of the big infrastructure roads, including the Central Expressway when they commenced. So, they have been in plenty in both. What we then, of course, some multilateral funding sources have been, I think, misused over the years. That is why we have got into this debt trap too. I think prudently not invested in the infrastructure we need right now. I think the country needs infrastructure right now and infrastructure for the future. So no point investing in infrastructure for the future if you don't have what is required right now. So some of these big bilateral grants, multilateral grants have not been misappropriated because it goes through a very transparent and rigorous process before getting implemented. But some of the bilateral lending has been project-based without giving enough weightage or thought to what our immediate requirements are. It might be good to have some infrastructure, yes, very good, but do we need it right now? So hopefully with this shock we have got, the recovery process will ensure that we we meet our immediate requirements and cater for while keeping room for expansion, not investing it right now. So hopefully, wisely, future investments, especially in the public sector investment program, will be directed properly.
Sure. In terms of state-led funding or projects rather, you mentioned that some of them have started to actually restart. But recently in the mid-year fiscal report, you saw that capex spending was actually extremely low compared to what was budgeted. So in terms of, this may be more on a cash basis. So in terms of the repayment structures, is it a lot more structured now compared to before? I know that there have been repayments that have been made, but is it happening more on a consistent basis now?
Yeah, in fact, when the project stalled and when the industry collapsed, the contractors have a huge problem of debt servicing, especially when the government sector was not paying their dues. But of course, the sector proposed scheme where the government could pay this debt through bonds, which they did, in fact. All the government debt to all due contractors have already been paid. That much I must tell you. If any contractor is saying they are not being paid, there's something wrong with their bill or something. But every payment has been made. So there are no pending payments to any contractor from the government as far as I know, and I think I speak for the industry, unless there is some real problem with that bill. Then the recommencement has been selective. And there is some spending, some of the uncompleted projects have to continue, see some continuation. Otherwise, there is no economic benefit or utilization. So those have been selected and there is a little spending on those.
Sure. Just in terms of, as you mentioned, there have been contractors that have already been paid, and I think I can direct this question to both Mahesh, actually maybe all three of you. As a result of that, are you seeing knock-on impacts because now people have some of the contractors have a little bit more cash in hand, or certain people have been, for example, the renewable energy sector has been paid. As a result of that they are restarting their projects, because of that, something that you have seen?
Yes, definitely. I think many of our customers, they were trapped. They had no more cash to do any operations. So many of them were at the edge of ceasing their operations partially as well. Not necessarily the very big ones, but in the end, all segments, whether it was small one, C1, C2, C7, really across the board, many of them struggled a lot, which is understandable if you're not paid 1.5 years, 2 years, right? If you have some of the projects and you see how much money has been put into them, to be able to fund them, and in the end, none of our customers or contractors is being set up to be a bank, right? And to provide those number of loans. So since it happened, I think we can see some of the projects have restarted or finished, right? Because many of those projects, they were just cut off, stopped in between, and so there we see some restarting.
Yes, I definitely tend to agree with him, and especially that really a big relief when it comes to cash flow, because I remember at one stage the renewable energy sector had about 13 to 14 months outstanding. So you hardly operate. You can't service debt, you can't pay salaries, you can't do anything. Now there is a room for you to actually operate the business and start investing on the new project. So that definitely a plus point. Definitely it's a positive sign for the industry. And hopefully it will continue in the same manner in the future as well, so that we will not get into these shocks in the future, because otherwise people will not think twice or 3 or 4 times before investing, especially when you're depending on a single client as a government.
But I think also some of the private consumers, they are now looking, should I invest or should I buy some bonds or something like that before really putting money into the ground. So I think whether it's a big investor or a small investor, reliability in the policies need to happen as well. So let's really see what happens towards the end of the year, and with that hopefully a good start not only for next year but for the next 3-4 years to come.
And we have a couple of questions already starting to come in on the Q&A, but just before we get into that, just one question for you, Mahesh. Just in terms of the export business, I think you might not be so expert, so just to touch on ACL, how has the export business been? Are margins sustainable right now in terms of the fact that there has been appreciation of the currency, and how do you see that going forward?
Actually, if you look at export, it's the next area that we can grow into, because we are limited by the size of our population. It's about in Sri Lanka, as well as by the country macro economics. So there is a supply chain diversification happening globally. So people go for China plus one strategy, partly driven by the COVID, and also due to geopolitical reasons. So there is a demand coming to other markets as well. So we can certainly benefit out of that. That is one thing. If you talk about ACL point of view, we have been serving the region through ACL and Kalani, as well as we also have a specialized cable manufacturing company called Cable Solution, which will be on public, which will going to get into a public domain in about a couple of weeks' time. They also operate, especially in US and European markets, on specialized cables. So. And those markets are not doing really well in the last financial year, so we have not seen that much of a growth in those markets. But we see the numbers are picking up now with the US and the specialized European market picking up. So definitely there are areas for us to grow in terms of export market. There's a lot of room for us to get into the new markets as well as new product lines. So that will be the next growth area for Sri Lankan companies to move into.
In terms of the margin side of things, with the currency appreciating, has that been a bit of a challenge, or how do you address that?
It has been a challenge because we quote the prices. Sometimes when you get the order, we quote the prices and we can't change those. So that's a challenge. But it works both ways. When the currency appreciates and depreciates, it works either way. I think what is important is you need to have a foothold in those markets and continue to build those relationships over a long period of time. So that is what I think. If you look at the margin short term, there could be fluctuations, Because once you establish a long relationship, you will have definite revenue income or the revenue stream coming from those markets. So that is what is more important.
Sure. And we're just about to move into the Q&A, but before we go into that, we'll have a short break and a quick video that will be played.
Welcome to Cal Online, your gateway to financial freedom, effortlessly managed from the palm of your hand. Whether you're initiating your investment journey with a low initial investment in unit trust funds, looking to secure your future with government securities like treasuries, or eager to engage with the stock market through real-time data and alerts, Cal Online is your comprehensive investment solution. Dive into Cal Online's features in no time with our rapid and secure sign-up process. Just a few clicks and you're ready to take control of your investments. Stay on top of your finances with Cal Online's comprehensive portfolio dashboard. Track your investments in real time and monitor their growth conveniently. With us, investing is made simple. Cal Online makes it easy to browse and invest through a wide range of investment options to suit your goals, including unit trust funds, treasury bills, and bonds for steady returns and a curated selection of stocks, enabling you to invest with just a few clicks. With our partnership with JustPay, we've revolutionized convenience in investment transactions. Cal Online ensures hassle-free funding, allowing you to focus solely on growing your portfolio so that you can seamlessly invest. Reinvesting your earnings is effortless with Cal Online. Diversify your portfolio by seamlessly allocating returns across a range of investment options, watching your wealth grow within our intuitive platform. Access Cal Online's real-time stock market data effortlessly. Keep track of the stock market in real time while getting notified on your favorite stock insights and performance, with up-to-the-minute insights right at your fingertips. Trade stocks effortlessly with ATRAD on Cal Online. Manage and monitor your investments with ease using our integrated tools for a seamless trading experience. Cal Online app delivers the latest economic news, insightful stock market analysis, and real-time share price alerts. Stay on top of market trends and make smarter investment choices. Our app is not just about investments. You can use the returns on your investments to pay your utilities using Easy Cash. Cal Online rewards your investment journey. Earn badges and rewards through our rewards program powered by Thagya, designed to motivate and celebrate your financial goals. With Cal Online, we are making investments accessible and convenient for everyone. Join the growing community of investors and seize the opportunity to invest your way to financial freedom. Trusted by many, Cal Online offers simplicity, reliability, and the path to your financial goals. Cal, your preferred partner in financial markets. Welcome.
Thank you for that, and we'll now move into the audience questions. So the first question is one thing that I think, Jan, you've already touched upon in terms of the labor side of things. There's been significant brain drain, but also in terms of the more what's considered as unskilled labor, that also has, had a significant outflow in the country. How I think to each of you, how do you address these kind of issues, and how do you fill in that gap?
Within our company, for sure, we've started a management trainee program. We've started a graduate engineering program, so that we actually provide much more internal training for young people. And with that also, we want to bond them towards our company in the long run. I think it's something which you cannot buy somewhere. It's not something where you can apply for it. Very dedicated program, and it has attention up to my level on a regular basis to fill some of those gaps.
Yeah, so I think all these challenges are common to all of us. The brain drain of the skilled people going in. So we have been faced with that, especially our quarry operations. At one point, we had 26 of our quarry engineers going to Australia, because they are sought after. But fortunately, of course, there was contraction in business also. So with available resources, it's a challenge to manage that. We challenged it, but new recruitment has not been difficult. Maybe one of the reasons we think is that they need the experience even to go abroad. So getting new recruitment in has not been difficult at all. In fact, we also have a management training program, graduate training program, and we have plenty of applicants. So we are building that, but we have to, the experience which we have lost, of course, it will take a period to gain. So of course, fortunately for us, we made everything possible for the core team to remain, and we had to keep the core team going. So we kept them going, the core resources, and of course now with the business opportunity expanding, we have to ensure that the other people are upskilled and put out there to meet with the demands of the industry. Another silver lining in this crisis was the increasing in efficiency and productivity. In fact, we invested in that. I think we have even introduced BIM for the first time in this country. To that level, we have invested in technology during the crisis just to improve productivity, efficiency, and reduce waste. So that is a significant impact. We have now seen on two of our big projects, we are using BIM, and the cost saving and productivity increase is phenomenal. Because unfortunately in this country, a lot of construction industry is traditional, very traditional. And if you ask me, you can be rest assured this building will never collapse. But the problem is, how much is it over-engineered is the question. So we have addressed that. Of course, in our own construction, design and build, we addressed it very well. The crisis helped us to upskill our guys. I said, you all don't go. You will upskill you all, because then your opportunities in the international job market is even greater. So that way we managed to retain them. Now it's a matter of sustaining them. So we need things to happen continuously, otherwise they will again upskill themselves, and some rich country will pick them up.
I think it's a challenge for almost all the industries. Just that the brain drain has been there, just that it got accelerated during the period, and also it has slowed down a bit. So we also have seen the impact of that, and also something that we need to live with in the future as well. So what we have done is basically we have defined the jobs. Basically, we always define the jobs and also kept someone else also knowing the particular job, so that we can manage the office workers in that way. And our capacity utilization has also come down. To a certain extent, it has helped, so we can manage with existing resources. But when we go back to the previous levels, we need to have a mechanism to recruit as well as retain more people.
There's another question here with regards to the elections and what kind of impact that can have in the upcoming election, but also in terms of previous cycles, what kind of impact that you have seen before. Open to anyone who wants to take it.
So, the upcoming traditionally, I think since independent, we have seen two families governing the country. But whatever color you call it, red or blue or green, whatever color you call it, hand or elephant or whatever you call it. But now in the new election, we see a significant third force entering. So this is new to the people, new to the country, and new to all of us, So it's uncertain of what the traditional parties we have seen throughout the years, what to expect, and we have lived in that this two-party system throughout the life expectancy of all our businesses, I think. So the third factor is unknown and not tested. So we'll have to. So that is the difference we see in this election.
Okay. Do you typically see, I don't know if there's some impact in terms of people constructing more or before or after, I don't know, because of election handouts, things like that typically tend to, put money in the hands of consumers to do these kind of things?
Yes, I think that is not only specific for Sri Lanka, that's around the world very similar. Before election, you can see road construction happening, asphalting, new carpets. That's where the public can see very quickly progress and very quickly have a more comfortable ride, right? So you think you're progressing. Is it really sustainable is a different question, but it usually happens. And also on the cement side, we can see some small goodies here and there. In the small villages, we can see more, little bit road construction, some small bridge projects happening. So I think that is pretty normal. Let's not say it's something special. It's normal pre-election.
Sure.
I think the outcome of the election, with respect to who's coming to the party, what we need is the policy consistency. So that is what is more important to any sector. So I think that is why I think to a certain extent people are not really started investing in spite of interest rates going down and etc. is that they are not really sure about the outcome. As long as we have the assurance of the policy consistency, I think people will start investing. So that will help almost all the sectors.
There's also a question in terms of whether you think that the government will reintroduce an MRP in terms of construction materials. Is that on the cards, or do you think because of the IMF program that's less likely?
So there has been, to a certain extent, had been governed or regulated earlier cement, and I cannot remember is it steel. There was a time that there has been price controls on that, but I don't really think, given the current thinking of the government, they will get into the price controls. So that's my read on that.
Yeah, I think it's a free market, it's free competition. It is an overcapacity, so there's no need to have a MRP. So the market determines the price. I think that's the best.
Sure. There's also a question specifically to you for INSEE. Whether you have any cost advantage in terms of clinker imports as of now?
Well, luckily we produce our own clinker as only manufacturer, 100% manufacturer in Sri Lanka. Puttalam cement factory is doing everything from the quarry, clinkerization, where you produce the clinker, and that is actually the highest value addition in the whole process. Aside of having that in Sri Lanka, and I think we can be very, very proud of Sansa Cement, having been there for over 60 years now. So it's a big advantage compared to any of the pure clinker importers or clearly also over the cement importers. I think we must look at also the opportunity for Sri Lanka not to only to have that specific knowledge. Our products are made by Sri Lankans from Sri Lankan soil for Sri Lanka as a nation and to build a nation, and I think it's something very special.
So would it be right to say that you are less exposed to currency volatility and so on compared to the others, and as a result have a better pricing power?
Yes, fully agree. So we are less exposed to any of our US dollar cost. We are more exposed to CEB increasing electricity tariffs.
Then you must be benefiting right now.
But we've been penalized before.
Sure. There's also a question in terms of interest rates. At what interest rates would you see it being viable to borrow for construction, particularly for rent-based projects like apartments and so on?
I can only tell you for the normal house builders, over the last 25 years, if we look at, or 30 years, if we look at interest rates, we saw construction activity increasing when they were below 11.5%, 12%. This year or going forward, I think the rate must come significantly below that based on this little disposable income available and people not being able to have mortgages eating up any of their disposable income.
So for the businesses, I think from the businesses' perspective, investing in the housing, apartment or condominium sector, I suppose the total sector exposure, the banks are cautious because of that. Already the interest rates are in single digits, the money market rates are in single digits. So it's a matter of but the construction cycle on a condominium development life cycle and disposal cycle will be maybe 3 to 5 years. So you will have to look at whether you can get a fixed term for 3 to 5 years. I think with companies with better balance sheets, the banks are looking and having a discussion. So we are not bankers, we can only take construction-related risk, but not finance-related risk. So they will have to come with a cap and a floor, a reasonable cap and a floor, especially with these low interest rates. As Jan said, I think the central bank is driving down the interest rates. Already in the money market, you can borrow AWPL minus. So why can't the banks now step in and give reasonable interest rates? So, and of course, as you know, there's a whole excess liquidity in the market. So the banking sector has to look at that positively. They are looking at it, but of course, maybe there may be a few bad loans. Of course, they have to segregate that and look at the other genuine private sector borrowers more positively.
This is just a question in terms of the residential market. They were mentioning that there was an oversupply that was there post-COVID. Are you seeing this is getting filled up and developers looking at new projects, or is it still very much the same as what it was before in terms of the view of the overall market? There was talks of a supply glut and so on.
The supply, okay, from a sales side, of course, a lot of factors come in, of course, the affordability and then the VAT also. There's 18% VAT on these condominium or apartment purchases. There has been some interest and some sales actually. In fact, it's quite surprising to see people still investing, but it's not affordable to the middle class, or maybe, or for that matter, maybe on the upper middle class. But maybe there are the isolated investors who have the resources of cash. I suppose they still like to invest in an asset. So that has been there. The oversupply question, I don't know from where you get that number, because if you look at all these condominiums, they're sold out. So where is the oversupply? I don't know, because the Trizen is almost sold out. Then 606 is almost sold out. Marina Square, we are almost 60%, but we are not really pushing it, and we have scheduled now completion. So of course, ITC and the landmark projects, they are at a different price point. I suppose they are not. But some of these, the bigger developers, Havelock City is, maybe 80%, 90% sold out. So this oversupply has, I know people talk about the oversupply, but I don't see where this oversupply is. Not in the general space. Maybe there may be some specific developments where I don't know whether it's a matter of not attractive enough for the investment purposes. I don't know that is the oversupply. But overall, there's been some traction in the little information I get. Right now, these new condominiums which they develop, they're selling like 20 units per month, which is quite substantial in a depressed market.
It's very interesting. Just in terms of, I think this might be the last question that we'll be able to take due to time constraints. And that question's for you, Mahesh, in terms of the new large renewable energy projects which source copper as well as aluminium cables. Can they entirely source this from domestic supplies, or will there be a need to import some of this additionally?
So those projects, most of the supply can be supplied by the Sri Lankan companies. We have the entire project range in Sri Lanka. So there's no need to, you can actually purchase economically from the local market. So there's no need to import. There's no economical benefit by importing into those projects. So you can simply buy from the local market as well.
So is it for the future pipeline as well that you have been hearing about?
For the future projects as well, yes.
Okay. All right, I think with that, we're time out for questions. So thank you very much to the panelists for joining us today and giving such valuable insights into the overall sector. I think we're looking at things not yet being as great as they could be, but we're looking at the green shoots, as you meant, starting to pop up. So thank you very much to everyone who joined us in the audience as well, and we'll see you next time at the next discussion.